This is Alan Bush with ADMIS. In the stock index futures, seeing prices a little bit lower. Looks like we have some renewed concerns about the political and economic situation in the Eurozone. Also, we did have jobless claims coming in much higher than anticipated in the most recent reporting period. However, at 9 o'clock we did get two reports. The Philadelphia Fed Index and consumer confidence both coming in stronger than expected, but it looks like futures really not responding that well to these two 9 o'clock bullish reports. So that could be an indication that we may see some pressure developing as the day wears on in stock index futures. Also, many traders pinning their hopes on the third quantitative easing plan from the Fed to sustain this bull market. However, we are believing that the problems that we are likely to see in the corporate earnings situation is likely to dominate in the longer term. In fact, the weaker earnings that we're seeing now in the third quarter will probably continue into the fourth quarter. So that could be a very important headwind for stock index futures. In the currencies, seeing the euro currency under some pressure. We have Greek unions on strike for the second time in 3 weeks. There is some talk that Greece could run out of funds by next month. There also is the perception that Spain will be asking for a bailout from the European Union next month as well. So all of that somewhat of a negative combination of factors for the euro currency. We had some recent strength in the Australian dollar. We also had China's GDP in the third quarter coming in as expected, up 7.4%. However, when we look at the electricity usage and production in China, that would be more consistent with a sub 7% growth in China's GDP. So that likely to be a bit of a negative on the Australian dollar when traders take a closer look at some of the other economic numbers coming out of China. And in the credit markets, seeing some better prices now with the jobless claims coming in as high as they did. I would think that that trend will continue today. So from here, I would expect further gains in the credit futures market. Don't forget we have the fiscal cliff at the end of the year. That also likely to be a supportive factor in the longer term for the credit markets. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Are you in for today? Sure.